Alright, hello and welcome to Camel Finance. I'm your boy Camel, and as promised, I've got an OG list here, so I'm going to take a quick minute of your time just to say thanks. So thank you to each and every one of you for supporting the channel. Thank you for getting me to 1,000 subscribers. It's really been a surprisingly humbling experience for me. I really was not expecting to receive the amount of support that I got yesterday. I had people reaching out to me and telling me that they've been able to improve their TA. I had some people tell me they've been able to turn profitable by watching the videos. And that includes even long-term investors that have been inspired and encouraged to just start performing very basic TA on their long-term holds. So it's been really humbling for me to know that people are finding value in the channel. It's been really humbling to know that people appreciate me keeping it real and showing you every single one of my positions. And ultimately, I hope to be able to continue to provide value, to continue to attempt to raise the standard, to raise the bar on this platform for crypto influencers and YouTube traders. If you really are a trader, if you really do take trades on this platform, then why not show your positions, right? Why not show all the stop losses? Stop losses don't matter. As long as you manage the risk, stop losses are 100% inevitable and do not matter. Why not show your mistakes? There's no trader out there that doesn't make mistakes, right? So if you're a real trader like I am, why not just show all your positions? Why not call them out ahead of time? So I really hope that in addition to enjoying the content and finding value, I hope people can start to hold these other crypto influencers and traders accountable. So I'm really, really grateful for all of the support the channel's received, for all of the kind messages. And as promised, here is the crypto OG list for all of you. I just want to preface this by saying, if for some reason you're on channel OG and I have missed you, I don't think I have missed anyone, but if anyone feels like they got left out here, then please don't take offense to this. Please just let me know. We'll stick you in the list. I had over 120 comments yesterday in the video section. The notification icon that lets me know when someone has commented stopped reporting every single one of the comments. So I had to go through and manually check the comments. So like I said, if you're not on the list, please don't be offended by this. Just give me a message and we'll redo the list. But I am 99% sure that we got everyone. Also, if there's anyone that has not been upgraded to triple OG status, then just let me know. However, I do think that since we read out the original OG list at 500 subscribers, that list should be inclusive of everyone that has truly earned triple OG status. So without further ado, let's get into this. If you found Camel Finance before 1,000 subscribers, then here you are, officially awarded OG status as part of the Camel crew. Thank you to each and every one of you. Thank you for the support and congratulations on becoming a true channel OG. And for those of you that were here before 500 subscribers, you have been upgraded, of course, to triple OG status. So a massive thank you to each and every one of you. Congratulations on the upgrade to triple OG status as part of the Camel crew. So a massive, massive thank you to all of you. A truly humbling experience. I was not expecting this at all. And I hope I can continue to provide value. I hope we can continue to grow this community. And I hope we can continue to do well this year because this year is turning out to be pretty good so far. So without further ado, thank you again. And let's get into today's episode. Today is, of course, CPI day. So we're going to get the inflation print at 1:30 UK time. There's a bit of conflicting data here. You can see the CPI estimates for today from all of these big banks range from about 4.9 to 5.1%. So we've got a consensus forecast of around 5%. However, Trueflation has us down on a 3 handle, as you can see. If we can get down towards this magical 3.8 number, I think if we can get sub 5% today, then what we will see is the market start to front run this pause in rate hikes. We'll see the likelihood of a pause at the next meeting increase. I think that will give the space for the market to front run this pause. Now, I'm going to come back to this because I know there's a lot of new subscribers, but the thing we need to look out for is if we are closer to the consensus estimate or above this, around 5% plus, rather than down towards 4% for the CPI print today, then what we're likely going to see is a repricing. We're going to see the market start to price in an additional 25 basis point hike. And I think this could be quite detrimental to short-term price action. So with a bit of luck, we'll end up closer to 4% than 5, or at least sub 5%. And like I said, that should give the room for the market to rally in the short term. People that have been following the channel for a while will be more than familiar with this concept, but I know I've got a few new subscribers, so I'm just going to briefly run over this idea, this thesis. This is the melt-up thesis that I proposed in the summer of last year. Back here, I said, I just don't think it's as bearish as 2008. I don't think we're going to have a big plunge. There's been times since then where this looked genius. And there's also been times since then when this looked absolutely moronic. But here we are, fast forward to today, we have indeed left a base behind. We have indeed broken out of the downward sloping purple bear market resistance line and are right at the inflection point as it stands. Now, of course, everything and anything is on the table because it's a market. We could easily see this roll over. And if that's the case, then we will have to scratch this idea off. However, if we can get a sub 5% CPI print today, if the markets can start looking forward and repricing to see that likely we have seen the last rate hike and we could tick this pause off right here, especially technically speaking, if we can clear these highs, then I think what we're going to see is the record amount of bearishness in the market at the moment have to start to capitulate to the upside. As the markets capitulate to the upside, we'll see more and more people flip from being bearish to bullish. Retail will pile into the market and create this blow off top event. You can see I've had here Congress banned from owning stocks at the top. So if you're not familiar with this, back here, they banned the Fed officials from owning the stocks. And they did this for quote unquote ethical reasons. They said it's not fair that the Fed gets to trade stocks, but all they really did is let them out of the top before we entered a massive bear market decline. Since then, they've been laying the groundwork in the news and talking about, again, for ethical reasons, banning Congress from owning stocks. So is it likely that they're going to ban them from owning stocks and trading without first creating a blow off top? Not in my opinion. I think they are going to at least push this market slightly higher before banning them, aka letting them out at the top. It's also worth noting that the cutting cycle is usually what catalyzes the downside for the stock market crashes. There's a common misconception out there that cutting rates is bullish for stocks, but if you go back and look at the historical data, and I've proved this on this channel time and time again, the pivot to a pause is bullish. The pivot from a pause in rate hikes to cutting is usually the trigger for a stock market decline. So the big question today is, can we get a lower CPI print? And if so, can that mean that the markets can start to front run this pause in rate hikes? And looking out to June, can we see a repricing, the majority of the probability, on a pause or on rate cuts? I personally am going to be using a combination of rate cuts, Congress, and trendline breakdowns as my trigger to exit this market before what I believe will be a giant meltdown. So that is an outline of the melt up thesis. We're talking about front running a pause. We're talking about letting Congress out near or at the top. And we're talking about crushing the record amount of bearishness and shorts that we see in the market and using them as fuel for an upside rally. The nice thing about today, or this week at least, is we'll get our answer. If we do indeed get a hot CPI print, we will see this roll over and we will have to scratch this whole idea off and say Camel was wrong with this idea. However, if we can get a low CPI print, or at least the markets can be forward-looking enough to understand that the pause is coming in the near future, then I think what we will see is risk rally. And I also believe this to be the path of most pain at the moment. You can see bull markets are always born on extreme pessimism. History repeats itself, and it is repeating itself right here. You can see this sentiment continues to be at record bearish levels, right as the technicals do not speak to an imminent rollover. So I expect it to be a little bit of a quiet day, a quiet week. I expect some chop in both directions as we are accustomed to seeing every CPI day. But I do believe once the dust settles, we'll be able to use the charts to tell us which way the market is going to be going over the coming weeks. So from the melt up and CPI to the Bitcoin news, PayPal has just announced that it holds just under $500 million of Bitcoin for its customers. And what's really interesting about this is that 499 million that they hold is up from just 291 million back in December. People are buying and holding, and it's going to be really interesting to see the info from Fidelity later this year. In amongst all the narrative, there continues to be increasing demand for Bitcoin. And it's not really surprising because on average, the US dollar loses 92% of its value in Bitcoin terms every 4 years. Bitcoin, as I often say, will continue to smoke every other asset class. In the short term, miners should be unbelievably profitable. The Bitcoin transactions in yellow here, as you can see, are now higher than they were during the peak of 2021. Remember, this is all because of the ordinals. This is all because of the BRC20 tokens and the meme coins being built on the Bitcoin protocol. It's my personal opinion that this isn't going to continue for much longer. People are paying extortionate amounts at the moment for Bitcoin, with the average transaction costing around $30. Right now, the miners are taking between 300 and 350k per block. So I think the sensible thing to do is to just let them have their fun, right? Let them continue to mint these meme coins, wait for eventually them to all crash to zero or near to zero, and then the whole system will start to patch this current spam attack on the Bitcoin network, the fees are not going to continue to go up forever. They will soon revert to normal. And overall, what we will have done is identify a small problem in the Bitcoin protocol and be able to patch it. That small problem, of course, is the ability to bombard the chain with these spam transactions and slow it down. However, as I've shown before, there's an auth disrespector patch that the nodes can run, and likely this is going to be the solution to this little problem here. Remember, every attack on Bitcoin only makes it stronger. And I know there's a lot of talk out there about forking the chain, having a bigger block size. Let me just say, I'm not giving this any of my energy, and the reason for this is we've been through this before. We've seen this before in 2017 with the fork wars and the hash wars. We've seen all of this. They forked the chain into a bunch of different Bitcoin variants. And at the end of the day, the people have spoken. The people have spoken by choosing to use Bitcoin, which is why Bitcoin continues to be the dominant network. Nobody actually picked up these Bcash or BSV forks. Nobody cares about them. And the reason for that is simple. If I asked you the question, which would you prefer? A less secure Bitcoin that operates faster, or a more secure Bitcoin and you have to wait a little bit? You would likely answer that you would rather have a more secure form of money. If you don't agree with that, you're free to go and use a different fork of Bitcoin. But you don't, do you? The average person doesn't, and there's a reason for that. It's because the people have spoken and the people value security over speed. Also, if you really wanted to solve the speed and the transaction fee problem, you can just use Lightning. So we have workarounds for this. The spam attack that is currently going on with Bitcoin is costing these spammers an absolute fortune, and they're soon going to run out of money. So, as always, Bitcoin doesn't care. Bitcoin doesn't care, and the holders do not care either. At an all-time high of 29% is the Bitcoin that has not moved in over 5 years. People are holding this stuff, and they are diamond handing it. People have accumulated Bitcoin and held it for over 5 years at record high levels. People are not selling. Nobody cares. They're just going to continue to stack Bitcoin, wait for the fees to come down, or use Lightning, withdraw it to cold storage so you actually own it, and TikTok next block. I've got a 1-minute clip here from Mark Minervini. He is a world champion stock trader. And just take a listen to what he says here.
So I'll give you guys a quick market update. We've had some traction in some names, something like a GRBK home builder stock that just made a big pop. We took about a 40% profit on it. The problem is that many of these names that have broken out recently have gone into earnings, so we've had to hold them into earnings, so the position sizes would be very small. I think once we get through earnings season, if we can see some more setups here, we can get a good opportunity to trade to the upside from low risk. And our longer term work is bullish on the S&P 500. So I think we just have to wait here and wait to see when stocks start to move in earnest. But with the Fed likely to pause rates soon, particularly if if inflation moderates here, I think we've probably seen the lows, and pullbacks now are viable in the S&P 500, and you just got to wait for merchandise to set up and to get those stocks and uptrends that are coming out of bases and hone in on some of the next leaders for the next cycle. So some more patience will probably pay off. Don't force any trades, cut the losses, keep the losses small, and you'll be around to participate in the next big bull market, which is certain to come at some point.
So there you have it. Just as I've been saying, a world champion stock trader has been saying as well, patience, 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 manage the risk. The things quietly are getting better. Things are slowly but surely improving. It's just that the laggards haven't figured this out yet. But make no mistake about it, we are 20-something% off of the lows. We've got Bitcoin currently almost 80% off of the lows. The situation simply isn't as bearish as it seems. Yes, there are a million reasons to be bearish, and you may well see me turn into a bear today. If we get some 5.7% CPI print, if the rates start to reprice to heavily start to price in a 25 basis point hike coming, then you may well see me flip bearish. But that is to be determined. It hasn't been determined yet. Just before we hop into some charts, I posted this yesterday to say that I bought, as per my YouTube videos, I bought IPX into the close. So this is a current long from me. You can see where the stop is. You can see where the entry was. So we are currently long and strong, and I continue to push IPX. You can see the VIX moving back into the green support, now resistance line. So some level of volatility around the CPI print, as always, is perfectly to be expected. But I do still expect this to continue to roll over, particularly if we can get that low CPI print. And I think we can still see the VIX down in the low teens as we complete this final blow off top portion of the melt up. In terms of the S&P 500, the current trade, the current long hanging right around break even. Now, do we have to take another stab at this? Does this dive down one more time and then we end up moving that to call that the cycle low and go in again? Maybe that's the case, but like I said, if we can get a lower CPI print today, then I would expect this to confirm a new cycle by taking out the local high from back here. And then I think it's time to push strongly to the upside for the US equities. You can see we still got our NASDAQ long from the breakout down here. So I could see a little bit of a dip coming, but more than likely, in my opinion, once the dust has settled from today's CPI print, we are going to see markets resolve to the upside. As always, I'm open to being proven wrong. The Dow, I think this low will hold so long as the CPI print is at forecast or lower. So there's really not much more to say in the short term. We'll just see how the CPI goes. Big question and decision time for Bitcoin and crypto, isn't it? So we're right in the timing band now where we should expect to see a cycle low form any day now. I think we're on day 61 today of a 60-day cycle. Remember, it's plus or minus 6 days, which is 10%. So I think any kind of strong push up here can be bought. I think we can then call this the cycle low. I would not rule out one last final flush down before we can resolve to the upside. It's a similar story from Ethereum. This could well be breakout, retest and resumption, but it hasn't resumed off yet. It could also come down and undercut these lows and then form a swing, in which case I think that will be buyable. But as Minavini said, and as I've been saying over and over again, patience, 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 manage the risk, and we'll let the dust settle from CPI today, I think. XRP still doing what I think it will do, which is to bleed down here and then break out. So just a trade signal called out for free well ahead of time. I don't think it's going to be time to attack for at least a month on XRP, maybe 2 or even 3 months. But I do think if we can continue to respect this downward sloping red resistance line, then eventually when it breaks out, that trade will be massive. I keep forgetting to cover the metals because I've just found them so boring. I've got this silver trade, this silver long still open, as you can see, not really doing a whole heap of anything. I've still got a gold miners position open as well, which as you can see here. So continuing to push that trade, but again, not really much more to say about that. And gold still kind of waddling its way up, isn't it? So for me, this isn't really touchable until we either consolidate here and then break out above the all-time highs. Then that could be a long, and that's why that position is lined up there. Or if this does something like this and then breaks down, then I will be expecting a deep flush from gold. So I'm just playing patient in terms of gold, not trying to force anything, taking it one day at a time and seeing what can happen from there. The dollar, is this consolidation before a breakdown? I would think so. I would think only a high CPI print could affect this. As long as the CPI comes in reasonable and the markets can start to front run this pause, I would think the dollar's going to break down any day now. And of course, that would align perfectly with the cycles for the S&P and Bitcoin. So again, this is to be determined. It's a one day at a time process, but my bias is, or I should say my expectation is, that we will see this trend down towards the mid 90s. You can see the yields here still looking heavy, aren't they? Still kind of speaking to a rollover rather than a breakout. Same is true of the 2-year yields and TLT. For me, this is going to be a long at some point. If this could start to break out, then I think we can long this. But for me, all the while it's in this sideways range, this is not really something I'm interested in. And this I would expect to continue sideways in this range until the melt up thesis becomes invalidated. All the while stocks are still trending up. I don't see the reason to start to add this. But for me, the breakout level would be above this yellow range at the top. If we can break out of there, then I would think that would be the time to say, okay, it's go time for TLT. So that's it from me. I hope you found value here today. I hope you enjoyed this. There's obviously not much to say really, because like I keep saying over and over and over again, we really need to see that CPI print. But so long as it comes in below 5%, I do think the market will rally. It might take a couple of days of volatility and wicks before the dust has settled. It might even take a couple of stabs. We might even have to pay a stop on the S&P 500 and then look to label the cycle low slightly later in the cycle and go again. But that's what stops are for. That's why we keep the risk to 1 to 2% max per trade. And sometimes it takes more than one stab. Of course, a low CPI print today, we'll see that we don't get stopped out. And in fact, we do undergo what I believe will be this melt up that I've been calling for almost a year now. We're right at that pivotal point. We're about to find out whether or not there's any validity to this entire thesis or not. So as ever, one day at a time, no emotions, no bias, and we'll let the charts tell me how to position. So trade safe out there. Of course, there'll be wicks. Of course, there'll be volatility. And I'll be back tomorrow with the review of the CPI data and how I'm positioning for that going forward as a pro swing trader. So in the meantime, look after yourselves. Take care from me. All the best. Cheers. Bye.
Be fearful when others are greedy. Be financiago when others are fearful. I will make us a two-planet species, wearing Financiaga.
I will keep raising rates till you stop buying NVIDIA and start buying Financiaga.
Bear Stearns is fine, and I am short Financiaga.
Our buybacks are bigger than your country's GDP. If I had additional money, I'd buy Financiaga.
Hitting the debt ceiling will be a financial calamity, but Financiaga is a revolution.
My job is to make sure the panel doesn't make fools of themselves. You would be a fool not to buy Financiaga.
We need the poor's to start losing jobs for us to be happy. Quantitative infinity is a theory. Financiaga is an inevitability.